That's the beauty of the Bitcoin stack in general. We use technologies that are cross-vendor independent. So like vendors can, any vendor, like if you take the seed out of a Coldcard, you can stick it in any other hardware wallet and it's going to work. So there's a beauty to that. You're not vendor dependent. If we disappear tomorrow, you're still safe. And there's a lot of those principles that are applied on how we develop our stuff.
Hey everyone, welcome to the show. I'm here with the one and only NVK, repeat guest, super technical and smart individual with anything to do with Bitcoin. Welcome to the show, NVK.
Hey, Preston. Thanks for having me back.
So here's where I want to start. And I think it's in an area that many probably aren't expecting. And it's just really kind of talking about the mempool. It's talking about fees, and it's talking about the long-term viability of fees taking over and really kind of providing the revenue for miners long-term in the face of so much happening on, call it layer twos or ETFs, and basically everybody choosing these surrogate holding entities for how they get exposure to Bitcoin. What are your thoughts on this? Is it something we should be concerned with? What are your thoughts here?
I mean, like most things in life, number go up fixes almost everything.
That's true. Okay, keep going.
Because think about it this way. If you look at the block reward, not the fees, just the block reward today, it's going to half again in 3.5 or 3 years from now?
Yeah.
Kind of lost track. So if the price is double in 3 years, miners are essentially making the same thing, right? Just block reward. I think it's safe to say that Bitcoin will probably be double in 3-4 years from now. So they'd be making about the same. So there is that on the block reward. I mean, like there is enough there, at least for a while, where we're going to have enough in block reward. Now, the fee space is super tricky, right? Because I think it's always going to be completely sort of like random in terms of fee spikes, because you're always going to have new sort of technology out there that leverages Bitcoin in ways that we may not want or whatever you go on the monetary, non-monetary use of Bitcoin, right? It's still a database out there in the network that is like its great majority use is for monetary purposes, which should be really. But anyways, so let's say that we do have some fee spikes here and there. I mean, that does help feed miners as well, but I don't think they can plan for that. I do believe though that the trend is very clear. We're not going to see base layer being packed again. It's still going to be probably more than what we have right now. Right now, they can practically do one set V by 8 again.
Yeah.
And I still think we're going to have moments like this throughout like ever in Bitcoin. But the reality is, like a UTXO is just going to continually be more, and it's going to be less necessary to move the ownership of that UTXO on chain, as people realize that Bitcoin is a great store of value and they can use other layers to settle or quasi settle, right? And save on fees. So for example, Lightning, right? Like you can do a lot of back and forth on Lightning before you decide to settle. The same is true for ARC, what's coming, and the same is true for coin-backed equities, right? I mean, like you can almost think that's another layer in Bitcoin.
I want to get to the ARC comment, but before we do that, I'm trying to think 20 years from now, are we still going to see mempools that are 1 sat per VB? And if so, is that an issue? I guess is really the question.
I don't think it's an issue, because if the price goes up, the reward that is a lot less in terms of Bitcoin units is still going to be a lot more in dollar units.
So you're saying the block reward alone, because you're getting this doubling, and if let's just say you take Saylor's model as far as like the price action and the appreciation over the next 10 to 20 years, you're saying that even though that block reward is still minuscule, it is enough because of the really quick math that you explained is all it has to do is go up by double every 4 years as far as the price of that.
I mean, yes. And there is more to this, right? Because the fees, Bitcoin fees are also Bitcoin unit based. They are not dollar based, right? So even if people are transacting a lot less on chain, right, because they don't want to spend those very expensive UTXOs in fees, those fees might still economically suffice because mining is USD denominated, right? Because Mining has to pay electricity in dollars. It has to pay rent in dollars. It has to pay for hardware gear in dollars. Employee salaries are still denominated in dollars. So I think there is a case for that. I mean, I can't predict the future. I know for a fact that, not for a fact, but I have a very strong belief that we're not going to be changing the Bitcoin cap to inflate so that we can pay miners. That's very likely to happen. And if that did happen, I dumped my Bitcoin, which I have not. But I would dump it if I had any. And
you got a smile out of me on that one. Go ahead.
I think people worry too much about these issues that are resolvable by number go up.
Yeah.
And it's seriously, if Bitcoin is not double in 20 years, today's price, the experiment likely failed.
Mm-hmm. Saylor talks about this from time to time where he's like, the bigger concern that I have is people really campaigning for this idea of adjusting anything and not just letting the fundamental, he describes it almost like physics. If we changed how much gravity there was that we were experiencing here on Earth, like you're going to wreak havoc in all fields of...
It is a very, how they call it? It's a very sensitive formula, right? Like we have a literal formula for how Bitcoin works. And if you change one variable, everything in the system changes, right?
Yeah.
It's the problem. SegWit changed a little bit of that formula with the discount for the data that's prunable. And that did change Bitcoin economics a bit. Wanting or not, it did.
Yeah.
If we had not increased the block size, miners would be making more now in fees. Maybe.
Yeah.
Maybe not. It's hard to know. You can't apply central planning. This is the cards that we were dealt. Now let's just use the cards that we were dealt in the best way we can. I do like his analogy where it is not moral or ethical to change the rules when the game already started. I think that's a very good way of framing some of these issues. Mm-hmm. That's not to say that we can't upgrade Bitcoin with other technical necessities. For example, covenants, right? Aside from making maybe people lose more Bitcoin in case they do it wrong, because then they'll have proof of birth, which is great for everybody, really. There is no economical change to the Bitcoin model, right? It just means that now Bitcoin is, if we do it right, we can now create vaults that are protected by the Bitcoin the same way that the Bitcoin units are protected by Bitcoin.
I want to come back to this one as well, but we need to frame it up a little bit more for the listener before we do that. Okay, so on this idea of not changing the fundamental units or incentives inside of Bitcoin, there's a massive debate for people that are really dialed into this stuff. I think for people on the fringe, they have no idea that this debate's even happening. But for people that are really dialed in, this debate between Bitcoin Core and Bitcoin Knots is just somewhat crazy right now as far as the conversations online. And I think for casual observers or people that own Bitcoin as an ETF or whatever, they don't even realize that this discussion is taking place.
It's probably a good thing.
Which is probably a good thing. Well, help explain this like in a really, really basic level. First of all, explain what Bitcoin Core is and what they do. And then let's talk about just kind of like what has materialized as far as the debate. And then third, I really want to try to talk about, is there risks here from a consensus standpoint? Is there a risk that we have two competing software versions cropping up? Let's first just frame it for the audience. You're very good at framing things and making it simple for the casual listener. So frame this up for them.
Okay, so what is Bitcoin, right? Like in terms of technically rule set. Bitcoin was never defined in a spec document. Like most standard, they have a spec document.
You're saying in the white paper?
Yeah, the white paper doesn't define Bitcoin minutia, right? When you build technology, especially protocol technology, you go out there and you write a huge spec book. Like it's like a literal book that if you go from spec to software, you can rebuild the protocol, right? Like you don't need software to begin with. You just need the spec book, right?
Okay.
In Bitcoin, we didn't have that. What we had was the Satoshi client, which is the original Bitcoin client. It got renamed to Bitcoin Core, but it really is the Satoshi client, the original Bitcoin client.
Okay.
There was the software that Satoshi put up. And it was a bit macaroni code. It's like a single guy just getting at it. There was no real spec for it.
And I heard Jeff Garzik say this many years ago. People have their opinion on Jeff, but he said many years ago that when he first saw the code, he was like, wow, this is a disaster. It seems like you kind of have a similar, and I say
yeah, we saw the code the first time. We're like, no, man, like this is just brutal.
Really? So that was your same opinion?
Yeah. You know, the beauty of Bitcoin is that the concept of it, right? Like the economical formula and the
game theory
adjustment,
the game
and all
theory.
this little sort of the game theory, everything that defines what Bitcoin is just conceptually, right? It is absolutely beautiful and brilliant, right? That dealt with Satoshi's true brilliancy, right?
Yeah.
His actual code implementation, I mean, it's pretty brutal.
I've heard this.
The original Satoshi client had poker in it, like the beginning stubs for a poker client, for example.
Is this why we have 21?
Who knows, right? But maybe, right? So like we have this brilliant concept.
Yeah.
You know, I'm sure if you got Einstein, right? Like after he figured out the concept of EMC square, right? Like if he tried to write a program that then goes and make like atomic model simulations, it would be code.
Yeah.
Like it's okay. We already done enough. It's amazing.
Do you think,
thank you.
NVK, do you think that this points more to this being an individual as opposed to a group because of the code looking like this?
No, I mean, like you can also make the case that the group decided to code this extremely poorly with Windows just to make a point
by design.
Discovered. Yeah, I mean, like it's one of those rabbit holes. If you ask me, I believe Satoshi was probably a person who lived outside of the law, maybe had its bumps with the deep state. So like he was somebody who deeply understood
what they were doing,
how the world really works.
Yeah, right. It's a great way to put it. Yeah.
And remember, right, like when you get into like the very lower levels and layers of society and state actors and things, like lawlessness is a lot more prevalent. You know what I mean? How things are done than people think that they are, right? Like it's
from a global point of view, you're saying.
Yeah, no, but even government. I mean, I remember, right, like the Navy worked on Tor and they funded Tor, but that's where the dark markets are, right? Like when you get to peak engineering, there's a lot of like people who do illegal because they understand the world. There's a lot of people who are just geniuses. It's like a big mess. That's just a tangent there. But the point is the software was not ideal and it was like extremely redone through the years, refactored. Right.
From a lot of different engineers that were provided.
Oh, yeah, like thousands. Yeah. Thousands of people have worked on Bitcoin Core. There were different sort of like quote unquote leaders. There were a lot of leaders that were played heroes. Like the drama is plentiful and it's an amazing story of 16 years of turnover. Right. But at one point, I can't remember, it was just before Gavin, maybe, which was the guy that Satoshi essentially like hinted a bit of like a role of leadership too.
And this is Gavin that you're referring to for people listening. Yeah.
He might have been Mike Hearn, which was a spook, allegedly.
Well, Mike was out of Google, right?
Yes. I think the story goes that he was the guy who allegedly put the back door on Google. But that's a different story. I don't want to let people go dive into that one. But anyways, the point is around that time, it was suggested that we split Bitcoin into two parts. The wallet part, right? And the consensus code part. And the consensus code part was going to be called Bitcoin Core. It is very common to have the core part of software being the part that's transportable between different clients and things. It didn't transpire much that way just because it's a monumental task. We're still working on it. There's a few different initiatives on working on that. And it became one of those things is like the software is the spec and the spec is the software, right? It's like very hard to move away from that. Bitcoin, although simple, is extremely complicated. And there is a lot of nuance to tiny little things and things affect each other. So anyways, so we got to this name called Bitcoin Core and instead of just Bitcoin. And Bitcoin Core just meant to be the main sort of implementation of Bitcoin, which is really the direct descendant derivative of the Satoshi coin. And I mean, not even a derivative, really direct. It's just, it was the same code base just being worked on. Now,
at what point did Luke come into the timeline? Oh, because this is important.
He was around early, extremely early. I can't remember.
Like 2010 early?
Allegis was the name of his mining pool.
Which was the first, was it the first mining pool? Was that right? For people listening, we're talking about Luke Dasher. And the reason that I bring up Luke and why it's important is because he's the one that's really spearheading the whole Bitcoin Knots, which is the competition.
I remember, it's funny, he has a history of wanting to do filters. Luke essentially forked Bitcoin Core, but he kept it in consensus with Bitcoin, right? So if you ran Knots, you don't fall off consensus, at least for now. You never know. And I remember he had,
and that's you never know
for things, blacklisting for Satoshi dies. There was a bunch of stuff.
But NVK, I really want to foot stomp that comment right there, because that's where we're really kind of going with the third part of the question, which is there a risk in there being two competing versions?
Oh, there is always a risk. Yeah. Because remember, the spec of Bitcoin is the software. As long as if you don't change anything that is consensus, you don't fork. Even if you decided to make your software pink, blue, it doesn't matter, right? As long as the transactions are valid and you're validating transactions that get mined, you should be good. So I doubt that they would choose to make changes that could make them fork out, because like reality is the majority of the economic actors in Bitcoin, economic nodes, really. So large nodes that are validating transactions and have lots of coins, and they are all running a version of, or a lot of miners do run patched core versions because they have different needs, especially around mempool policy already.
So that's not something I was aware of. Okay, explain that a little bit more.
Well, you can go even from basics, right? Like, I mean, Bitcoin Core has a limit on the size of the mempool that shows, right?
Okay.
And if you're a miner, you might want to expand that mempool to fit in even more stuff in it. Just have more computational power.
So they're running like basically their own version of Core, but just allows them to kind of see the mempool at a larger level. Okay.
And from time to time, people will create a transaction that it's not really valid on the core mempool, but it is valid in a block. Things happen. I don't have the examples in front of me, but the point is, like, there is some, as long as the transactions are valid on a block, you're pretty much good, even if you deviate on how you do little things.
Yeah.
And that's sort of like where it goes. I mean, and then you have all the soft policies, right? Like all the standardness, as they call it. And that's where there's a lot of disagreement. And it's funny that like the disagreement can happen because these are not hard consensus rules. Right?
Which goes back to your original comment that there was never a spec sheet that went out with the protocol.
Yes.
Okay.
But like, there's been a lot of people who are very smart who made the software a lot better, where from your mempool, we have a better view of that's, by the way, the argument that Core has for some of the removal of the op return limit, things like that, is that like their argument is that you get a better view of all the transactions in the mempool, so you can calculate fees better, for example, and you disincentivize centralization, right? But then the other side of the argument is that you would incentivize people to make non-monetary transactions of Bitcoin and incentivize them to bloat the network with large op returns, but op returns are prunable on the other side. Like, it's a bit of a waste of time to fight too much over the minutia on this. I think the biggest problem right now is, and this is more like a meta comment, is that like the people who work on Bitcoin Core are volunteers, right? And they're humans. Humans love to create groups, and people group themselves based on their preferences, and then they tend to go in a certain orthodoxy together, right? Like, I mean, that's the most human behavior. And Bitcoin Core is mostly managed from a software management perspective on GitHub. And GitHub, bought by Microsoft, it is a terrible place for you to manage software that is contentious, right? And mind you, like, the more valuable Bitcoin becomes, the more contention there's going to be, even the smallest changes, right? Because it affects everybody's bag, so everybody might have an opinion. But the thing is, like Bitcoin Core, Satoshi client, does not have automatic update on purpose. And if there ever is, that is when you stop updating, is before you have auto updates. That's when you break out the pitchfork. The auto updates is a form of like user management in a way, right? Like now, if we had software updates, Core could make changes that the network would take up without being fully agent around it, right? Agency in the software you choose in Bitcoin or the update you choose in Bitcoin is very important, because then people cannot take you without your sort of explicit approval or knowledge into forks that may not be good, like say, for example, inflation or something, right? The point there, I guess, is that Core, this group, the current version of the group, because the group changes all the time too, and it's a lot of people, and there's like the main maintainers, sub maintainers, that relationship also changes all the time. It does have a monopoly on the distribution of the Bitcoin code, right? Like the majority of the Bitcoin code is Core, especially when you come to economic actors. And when they choose to deploy a change, even if it's standard in its so non-hard consensus rules, even if they don't push updates as automatic updates, like it still causes the network to probably adopt their version, right? So they do have power, and with power comes a lot of contention. So personally, I think we're starting to get to a point where maybe expediting the division of the wallet software from the consensus part of Core may be extra important. And then incentivizing people to maybe have their own versions, like more versions of Core that try to not touch the consensus code. Important.
This is really, so basically you're getting back to the spec sheet. Is like, let's break this out. Let's all agree on what those specs are. And then on the areas that aren't risked to consensus long term, then let people build their own versions of those.
Exactly. And then if you over filter, it just means you're going to have a very poor view of the mempool.
Yeah.
But then, maybe you just have a lot of social pool, and you can sort of incentivize people to run some filters that may be better for the Bitcoin, block bloat or whatever. Like these things become very loosey-goosey because, again, they're not hard consensus, right? And if you overdo something, then you just fall off in a way. You can think about it that way.
Do you think that we could get agreement on what those technical specs are to put in a nice, neat order and then allow? Because it seems like right now that wouldn't be the case.
It's just too big. Like the consensus part is just too big. So yes, anything is possible, but it's completely unrealistic. So there is a project called libconsensus, and who is working on that? I think it's a charlatan is working on that.
Like lid, like you would put a lid on it? Okay.
Lib like library.
Oh, okay. Lib.
Yeah.
Okay.
So libconsensus, and the goal of that project is to separate the consensus code from which is the original Core concept.
Interesting. Hey, I want to try to frame this real simple because we talked about a lot of different things here. And I want you to correct me if I'm saying any of this wrong. But the debate, if I was going to really break it down simply, you have this op return. And today it's at 83 bytes. This is a policy rule. Bitcoin Core has been enforcing this limit of 83, and anything larger than that is considered spam or something that is being obtuse in a block. And Core has come out and says, we're just going to lift this. And if you want to create mammoth transaction, and there's probably a bunch of JPEGs or whatever in that block, but you're willing to pay the high fee, then we're just going to let the fee market figure out what should go into the next block and what shouldn't. And we're just going to lift this 83 limit. Did I say something wrong there?
No, that's correct. It's just, I think there's just two little things that are important on that. One is that op returns are prunable. So that means you can remove them from your node. So you don't have to store them. You do have to process them, but you don't have to store them.
Okay. Which is important and the reason why this is important is because if you don't want to store 4 megabytes of somebody's JPEG on your node, you can basically extract that out and you don't have to store it, and it's not going to take up all the memory. And am I correct? Okay,
correct.
Keep going. What was the second point?
Sorry, I forgot.
Oh man, I messed you up. I'm sorry. When I start talking, I guess it'll pop in your head. Let me keep going.
Go ahead.
So the thing that Luke is really getting behind with Bitcoin Knots is he's saying, no, this 83 byte limit still needs to be in place. And this is here for a reason. And, if people are running a node like myself and many others that we have 20,000 plus people running their nodes, if they don't want to relay a transaction of a bunch of JPEGs, they don't have to relay it in this like gossip network of these are the transactions that are trying to get into the mempool. So if somebody's trying to put JPEGs in there and I'm running my own hardware, my own node that I paid for, and I'm spending electricity to run, if I don't want to relay these transactions that are over that, well, then now I have the ability to do that. And Core is kind of removing, my understanding is that Core is removing that ability for me to filter transactions that are over this 83-bit limit, which is a somewhat arbitrary limit, but it's
the limit came in way back then because there were issues with very unsavory things that could be put into Bitcoin blocks when Bitcoin was very small, and that could have been an excuse to shut it down.
And I think we know where you're going with that.
Yeah.
Yeah.
So nowadays, it doesn't really matter. I'm sure people put stuff that shouldn't be there anyways, but you can't turn it off anymore. It's like, no, it's the blockchain of the Bitcoin.
Yeah.
MicroStrategy owns some.
Yeah.
It's a different environment. I'm not a huge fan of removing that limit. I'm not sure it's a great use of time.
Well, this is my point on it, NVK, is why take that optionality away from me as a person who's running a node? If I want to limit it, I should be able to. If I want to open it up and allow whatever to be put in there, then you should have that option as a person who's choosing to run the hardware and the software that you paid for.
I mean, the argument, as I understand, is that because they're the reference implementation, they're trying to optimize for maximum visibility of the mempool. And that includes transactions you may not like. So it's just that like, okay, this is the reference. So let's make sure that if you're running the reference implementation, you can see all the transactions, including the ones that you don't want to see happen. Because like reality is for literally ever, miners have taken out of bound or out of mempool direct transactions from people to mine. It's like trying to change the master branch to like main branch on GitHub because it's like, it's now woke to say master branch or something. It really just riled up all sides for no reason where, we should be arguing about like more interesting things.
Well, I definitely agree with that point that there's other things that are more important to be discussing. I think the issue and why this turned into such a big deal is because it was the method that Core used to roll it out. Would you agree with that? It was the method at which Core took.
It was terrible. It was very poorly managed. That GitHub issue, listen, it's like, I kind of feel for them too, because managing GitHub and seeing a bunch of people like posting AI, like 8 answers to fight on that thread was very, very, I'd be pissed off too. On Coldcard, we closed the issues because we just don't have patience to deal with like a lot of trolling. But again, it's like the reason why Bitcoin Core was so sort of like respected and so above, it's because they always managed to be above it all. Orion, which was one of the main maintainers prior to now, always managed to remain fully impartial, try to just keep things open and sort of just let people like tired out on threads and things. Moderation. Again, I was saying GitHub has very poor moderation tools for open source software. But at the same time, like the way like you almost feel like a troll opening the PR too. The way that the PR was open, it was very poorly done. Like everything around this issue was poor management, poor behavior by all sides, just all overall garbage. So, you end up at the place you're at with people screaming at each other on Twitter.
Let's address this right now from your point of view. Is this a long-term concern? So you have people, they hear that last half hour of us talking about this, and all they really want to know is this an issue?
It's not. No, okay. It's not. None of this is do or die for Bitcoin.
It's just, how can we move as a community? I think for me, I'm saying, how can we move forward as a community in a more constructive way, in a more thoughtful way and make sure that we don't destroy the consensus that already exists on this protocol.
No, see, like, this is the thing. I'm on the other side of this. People should like be even more against each other. I just don't want to see the discussion, but like Bitcoin game theory is amazing for that. Like, the more people don't like each other, the more Bitcoin doesn't change. You're going to get like flare ups on the non-consensus code, like the op return size filter, something like that. But realistically speaking, like, this just makes Bitcoin stronger.
Because it can't be changed, is your point?
Yeah, because it's going to be even harder to make any changes, right? Because now you have even more people who disagree, more people who don't trust each other. So there is more scrutiny. It's amazing. Like, you want Bitcoin to be as adversarial as possible.
Which is interesting, right? That's like, what other thing exists in the world that would be the scenario of more disagreement leads to stronger entrenchment of the protocol, right?
You know, it's unpleasant. And I hope that people can keep the discourse to a more polite and gentleman-like discussion. You don't have to go tell people to do something to a goat. But, you know, scrutiny, adversarialness, these are all like parts of the Bitcoin game theory. So it's okay. I think when people see people disagreeing around Bitcoin, it means that's a good thing. There is like, what could kill Bitcoin is apathy. Let's put it this way. If there is full apathy, Bitcoin dies. Because then people just take Bitcoin in whatever direction is useful to them, like democracy kind of thing. And then it gets gamed out and then it dies, right? And now if people continue just having very fervor orthodoxies around Bitcoin and their nodes, it's great.
All right, let's move on. Let's talk about Nostr. You and I are hardcore primal client users and promoters, and we love it. And I'm just very bullish on Nostr. I'm curious to hear, because I haven't had this conversation with you for a while. I'm kind of curious your thoughts on the status of Nostr, where it's at right now, where you kind of see it going, and maybe most importantly, your description of what is it? Because I think people looking at it today would say, oh, it's a replacement for Twitter. It's decentralized social media. But my opinion, and I suspect you agree with me on this, is that it's something way bigger than that. It's identity layer, a decentralized identity layer. And so what in the world does that mean? Give us your thoughts.
I personally don't like Nostr for identity in terms of like logging in to sites and things, because it links your identity to log in at sites and things. But I love it as a way to find identities, right? So you can find coordination, like an address book that nobody controls. Because email is kind of an address book, but you know, email depends on domains. Domains are centralized. You can lose your domain, right? But nobody can take away your private keys, your Nostr private keys, unless you lose them. So it's super cool that way. Great way to find people. There is like a lot of work being done so that you can find privacy in the interaction between your identity and maybe services. Then the login with Nostr will become great. You just think about Nostr as like a decentralized, non-authority way of having identities and address book, right? So you can send payments to each other. You can send messages to each other. AIs can have their own private key pair. So you can have AI agents that can talk to each other. They can find each other. And that sort of opens this huge design space for everything that is on the internet. It sounds a little sort of out there, but that's almost everything that's on the internet could leverage Nostr in that sense. So it really is just an open protocol for communication.
Are you suggesting that AIs wouldn't be able to get around that in some other way? Like they'd have to use a Nostr decentralized protocol to have that identity?
They could use a centralized system too, as they do now. But then again, they're depending, first of all, they're using a design space that was not designed for them to use it in that way, right? So like the internet, the way it is designed today, the protocols that we have, like email, HTTP, and those things, they're not natural for proper payments, for AIs to talk to each other, and all that stuff, right? It's very inefficient. Nostr, on the other hand, is like, you know, you have this essentially signed events, signed messages with public key cryptography that are extremely efficient for this kind of behavior.
And they're going to be smart enough to understand the value prop of
exactly.
Yeah.
Exactly. Right.
Yeah.
And then from the user perspective too, I mean, like you gain the fact that nobody can fake with an AI or Photoshop your Nostr tweet, right? Like, which is the rage now. I mean, like, it's a
really big deal. Yeah. To the point that I just said, I think that's one of the biggest hangups that we have today on Nostr is people just don't understand the value prop. I mean, we're having a hard enough time getting people to understand decentralized money, let alone decentralized speech and identity.
I mean, this takes time. Like, it took 16 years for Bitcoin to be 100,000 times more than $1. It took 12 years for public traded companies to publicly talk about their Bitcoin pile. It takes time. And when you look at these things in the time scale that human altering technologies normally have, it still has been nothing. Right? I mean, like, gold had 5,000 years. You know?
Yeah.
And the printing press had what, like 200 now, 300 now? No, more. When was Gutenberg? Was it 1200 or 1400? Anyways, long time. The point is, things take time, right? And we're all like, the people who understand these things deeply are anxious to have everybody else understand. And the people who don't understand it is like, what do I care? Like, my life works, right?
What if you could grow your wealth effortlessly with a consistent income stream and in a tax-advantaged way? Bitcoin mining with Abundant Mines checks all of these boxes. Abundant Mines delivers a premium, hands-off Bitcoin miner hosting solution at renewable-powered facilities in Oregon, offering low-cost energy, industry-leading uptimes, and white-glove service. Your investment works harder for you so you can stack discounted Bitcoin without the headaches of active management. Their cool and stable climate extends the life of your machines, and if repairs are needed, their team handles it fast and at no extra cost. With in-person exclusive educational events, you get unmatched transparency and insider knowledge. Successful entrepreneurs, investors, and investment funds trust Abundant Mines to optimize their mining profits with significant tax advantages. Get started today at abundantmines.com/Preston for a free gift as a listener of this show. That's abundantmines.com/Preston because elite investors choose abundance.
So it takes time for these two things to convert and converge. But we are moving, right? Like, Nostr comes in waves, the same way the Bitcoin price, for example, does, because it's the adoption wave, right? And same is true for Bitcoin. It's an adoption wave, not the value wave. It's moving. I mean, we have then like layer 3 Bitcoin payment systems that leverage Nostr natively, like cashew tokens and, Slimfetti, all these other technologies for payments they wouldn't work as well on Twitter, right? Unless Twitter integrates them. But like on Nostr, you don't need permission for that, right? You can just leverage Nostr. Now you have payments. You can tip people, right? You can do all these things. So as the build out happen for very user-friendly, obvious value propositions, right? People will start migrating over, right? Like, for example, Nostr long-term forms, long-term content. It's like, it's already better than Substack, and you can get tipped and you're not blocked by Twitter.
Yeah, which is kind of a big deal. It's just hard getting people to understand the value prop. It really is. I was in South Korea recently, and there was a friend that we introduced to Nostr via Primal, and they got onboarded. They actually got a lot of followers. And like most things, they just kind of didn't pay attention to it for a little bit because they had some people help them get all set up. And of course, they lost their private key to their Nostr. And they were asking me, they're like, okay, so like, who's the admin that I need to talk to get my access back? And I looked at the person and I was like, well, it doesn't work like that. It's gone forever. And then they were like, well, I have 5,000 followers or whatever on Nostr. And I was like, yeah, well, you'll never make another post again because it's like gone.
It's very common for early adopters to get burned, right? Like, the amount of people who lost Bitcoin in the very early days, people who bought like literally 100,000 Bitcoins for like nothing.
Yeah.
For $100. They lost coins because the tools in the early days of Bitcoin were very poor. They gave poor experiences. And a lot of people don't come back.
Mm-hmm.
So there is this turnover that happens in early stages of technology. People just get burned by the technology. They don't want to come back. So we don't depend on them. I mean, like, Bitcoin has moved on, even if some people don't like Bitcoin because they lost Bitcoin, right? Like, their hard drive is in a pile of garbage or something.
But so NVK, to this point, I'm looking at it and like, you're an engineer. You're a person who understands things technically at a level that, you're the 0.1 percentile in the world. I come with an engineering background. some of this stuff is somewhat innate to us. We just kind of wrap our head around it quicker because of how we're wired. Most of the public isn't. Maybe they're in marketing, maybe they're in whatever, and they just don't have that technical foundation. And so when they come across something like this and the app says, oh, remember these keys, they're like, okay, yeah, I got it. Because they're used to just how they've interacted with everything else on the planet, which is I can always be bailed out by some administrator to save me. And I think that I don't know. I think that this is a way bigger deal and a bigger hurdle for us when it comes to Nostr, specifically over Bitcoin. I think with Bitcoin, people know it's money and that they probably need to pay a higher level of attention to it. But like when it comes to Nostr, I'm just more concerned as to that variable, and that roadblock is just the technical competence of the everyday person. And I'm saying this on the back of just coming from the DMV, right? I literally was at the DMV for 2 hours this morning.
Okay. You're a little jaded though. I think, listen, it's not a matter of like being smart, not being smart. Just having like, if you want to be an early adopter, you just have to have higher pain tolerance. We don't have to onboard the normies yet, the same way we didn't have to in the Bitcoin in the early days. People will come as the value proposition is high enough for the level of pain that they will have to endure. It's just the nature of new technology. But the thing is, like, the change is massive. Like, I lost my first Nostr private key that I used for the whole first year. That's gone. And then, and then I semi-lost my current key, but then it was reversible. But the point is that the tools were very rudimentary then. They're much better now. And if you do go to, Primo is the only tool that I would recommend to a normie. It's like, if you go to Primo and you create an account there, the chances of you losing your keys are pretty low. They're not zero, but they're pretty low. And it's going to get better, right? Like once we have better signing schemas or social recovery, whatever is the solution, right? It gets better.
To that point,
it may never be as good as Twitter in terms of recovery because you own your keys. It's the same with Bitcoin.
Yeah. Like there's social recovery. Some of the ideas that you've seen kind of born in Bitcoin that I think you would strongly argue are terrible ways to secure your keys might act, and I'm being very serious, might actually be really good methods for securing keys on something like Nostr, where the level of, would you agree with that?
It's the value prop is a little different, because the problem is a little different, right?
Yeah.
Like, you're trying to maintain access to your identity, right? Like if you leak your Bitcoin,
it's
you
gone.
Can't just create a new one.
Yeah.
So it is different in that sense, right? So the solutions will vary a little bit more. And I think maybe social recovery might be a great solution for it. But there is more to this, right? There's a lot more tech that can be built up because the primitives that it's restored for Nostr, you can create more clever signing schemas that will give you much better recoverability and resilience. But it takes time.
Yeah. For people that are hearing this conversation, I think it is time for you to try it out because it is really different than what it was, call it a year ago or definitely 2 years ago on Nostr. And obviously, we're very biased. We are advisors with Primal, but I think if you would download the app and try it out, I think you're going to be really impressed with how simple, how you basically have a Bitcoin wallet right there embedded into the social network, and your ability to just start up conversations and zap people with Bitcoin is like no other.
I think we got to the point usability wise, where I cannot tell if I'm on Twitter or Primo anymore on my phone. I actually get confused.
Yeah, same.
And we're still in this phase of development. We're sort of trying to emulate the things we had before. Where I think things are going forward are going to become more interesting, where you're doing things that were just not done before. I'm often looking for the zap button on Twitter.
Yeah.
It pisses me off that I cannot send some sats to somebody on Twitter that said something funny or something useful to me.
Yeah.
So I think monetization is Nostr with Bitcoin is just so far ahead of what centralized systems can do that they just can't compete.
Yeah. I mean, I know when people share an interview that I did, I almost always zap them $1 or whatever, just because I appreciate them sharing the content, right? It's a value add for me to have people out there sharing the content and spreading the things that I'm talking about. And I don't know. Long term, I'm very bullish on this. I just don't understand the timeline of adoption. And I just think that I don't know. It's hard to really kind of wrap my head around, but really enjoyed hearing your comments on that. So people who don't know who you are one of the best hardware developers when it comes to Bitcoin hardware wallets on the planet. Tell people a little bit about Coldcard. Tell them if you have anything like roadmap wise, like what you see moving forward and kind of how you see the space developing or anything else that you really want to talk about with respect to Coldcard.
Thanks for that. I think like a big difference between us and all the other hardware, there's a lot of very good stuff out there. Like the space is developed quite a lot, is that we are an independent Bitcoin only hardware company that's been doing this for literally ever. And we use Bitcoin. You know, I know it sounds crazy, but like so many companies out there, they just have fiat people running the company and do those things. I think the reason why the products that we make are the way they are is because it's well used for so long by so many people who actually use Bitcoin. And we have this sort of like very clear, at least to us, path on how this thing plays out, right? We really think that the sort of the proverbial grandma that's going to use Bitcoin on chain is like idiotic, to say the least, because there's not enough sats for everybody, right? Like there's only 2.1 quadrillion sats and there's 8 billion people in the world, and wealth distribution is a basis point now and maybe 100 times better, and that's still 1%. And then when you break that down, there's just not enough sats. So what happens then is that the majority of the people holding on-chain Bitcoin are going to be people who chose personal responsibility, who chose to vary with a lot of agency to do this, right? To have their metal plate, stamp that seed down, and want to pass that on to their kids and function in that sort of extreme self-custody environment. Things are a lot easier now. You know, you tap here, you scan that, and transaction goes away. But the thinking is from this extreme perspective. It's not different than like even people who have a lot of money and don't believe in gold as a medium of exchange, it still has like a decent amount of gold in a vault somewhere, in like physical, right? And that is the perspective that like humans have had with all their monies and stores of value throughout like millennia, right? There's the stuff that is trendy today. There's the stuff that is like, I need it in case of emergency. And then there's sort of like the balance and in between of that, right? So we built the products for the people who need to transact in a few different ways, right? But mostly focused on this sort of extremely self-sovereign, self-custody of that Bitcoin. They own that Bitcoin. They don't leak privacy if they do it right. And it's a much better place to be in. And if they can just sit this out, they will see a lot of returns on that Bitcoin, hopefully, right? That's the plan. Now, what happens is like, can my grandma use this? Yes. Like I've tested, it's totally usable, but it's not designed for grandmas. And I think there's a lot of distraction in the market because when you choose to make something very secure, there will be trade-off, right? And I think those trade-offs are necessary because again, if you have just $1,000 worth of Bitcoin, like just keep it on an app. There's a million apps that are amazing. Many of them are fully self-sovereign, whatever, but like you don't need to buy stuff to store that.
Mm-hmm.
And you can progress. And like the point that don't have this sort of like paralysis where you don't go and buy the Bitcoin, you know, and then slowly get it out of the exchange, learn how to do it and move it that way. But realistically, like we were talking about the base layer not having transactions, right?
Mm-hmm.
Is that, you know, the majority of the people are going to be on Lightning, are going to be on layer 3s, layer 4s, layer 5s, whatever, right? They're not going to be storing Bitcoin in their hardware wallet. That's going to be a niche market.
Yeah.
That we hope to address it very well. But that is the main sort of difference there.
Do you try to cater to the institutions and how they're going about the self-custody as far as the signing devices, or is it much more retail based? I'm just kind of curious on that.
So there are exchanges that use our devices as part of their
what a compliment, by the way.
Multi-sig.
Yeah.
Our devices are well used by institutions using collaborative multi-sig. There's institutions who make it with just Coldcard forums. There is a lot of large holders out there that use passphrase with single sig. There's a place for everything. We don't focus on people who need normally qualified custodians because their needs are of a legal nature, not of a technical nature.
Yeah. That's a great way to frame it. Yeah.
Yeah. So even though there are some qualified custodians that do use some of our technology, the point is when, say, MicroStrategy has the requirements, the legal requirements on how that Bitcoin is held, they end up going to disqualified custodians or big name brands because they don't want to get sued if there's a problem. But, those are 100 actors, maybe 1,000 in a few years from now. But it's a very small, unique market. The vast majority of the money is in, say, family offices. So, they're stuffing vaults in places with Swiss francs. They're stuffing vaults with gold. They're stuffing vaults with Coldcard. There is a lot of stuff out there that is just not as visible, but that's where a lot of the money is. And what's cool is that, you as an average person with some tens of thousands of dollars in savings in Bitcoin can store on that same Coldcard that people who store hundreds of millions of dollars do. That's the beauty of the Bitcoin tech in general. We use technologies that are cross-vendor independent. So vendors can, any vendor, if you take the seed out of a Coldcard, you can stick it in any other hardware wallet and it's going to work. So there's a beauty to that. You're not vendor dependent. If we disappear tomorrow, you're still safe. And there's a lot of those principles that are applied on how we develop our stuff.
NVK, I could talk to you all day long because you're such a wealth of knowledge when it comes to this stuff. What I appreciate the most is you're able to frame it in a way that doesn't have this bias one way or the other. You're very middle of the road as far as just being able to lay out the strengths and the weaknesses of any side of these arguments. And I greatly appreciate that. And I know the listener does as well. So thank you so much for making time to come on the show. Give people a handoff or anything else that you want to highlight or promote. I'll let the audience know.
Thanks for that, Preston. I know I'm just another Bitcoin idiot, but I appreciate it.
You're our idiot, NVK.
That's right. No, I mean, seriously, if people are interested in self-custodying and having a solution that hopefully is handed over to their children, their grandchildren, and grandchildren, take a look at our stuff. It's at coinkite.com. We make the Coldcard, we make the tap signer, we make a bunch of stuff. I have a million other projects like the Bitcoin treasuries and things like that. We have way too much fun in this space.
We do. Thank you, sir. Such a pleasure and honor to have you. And I look forward to the next chat.
And then there's the sovereignty part of Bitcoin. But what happens when the government says, you know what, we're going to tax Bitcoin differently. And let's say you really eat into the ETF and you have 90% of your portfolio in Bitcoin ETF, right? Now you have a conundrum there, right? That's a problem, right? They can just take it.